What we're seeing in other jurisdictions is indeed market-driven adoption of taxonomies, and it's spurred by development of taxonomy-aligned bonds, loans, and other instruments as well. And we see the demand from the investor side. The pension plans, the asset managers, they're demanding this kind of standardized classification system because it replaces this patchwork approach.
Welcome to Sustainability Leaders. I'm Michael Torrance, Chief Sustainability Officer at BMO. On this show, we will talk with leading sustainability practitioners from the corporate, investor, academic, and NGO communities to explore how this rapidly evolving field of sustainability is impacting global investment, business practices, and our world.
The views expressed here are those of the participants and not those of Bank of Montreal, its affiliates, or subsidiaries.
I'm very excited to have Marlene Puffer, the head of the Canadian Taxonomy and Transition Planning Council, joining us today. Marlene, welcome to BMO Sustainability Leaders podcast. Tell us a little bit about yourself and some of your previous work.
Well, thanks for having me. I used to work at BMO as part of my career. I started out at one of the other dealers and was on the debt capital markets desk at BMO for a few years as part of my fixed income journey in the investment industry. Made my way through a number of avenues, consulting and macro think tanks and things like that, and made my way to the pension side. And I was on the board of the Healthcare of Ontario Pension Plan for about 9 years during and after the financial crisis of 2008-9. And I ran a small pension plan at NAV Canada, and then I ran a larger pension plan at CN Investment Division, and then ultimately was the Chief Investment Officer of AIMCO in Alberta most recently. One other role that I have is I chair the Investment Oversight Committee at Railpen in the UK, a fantastic pension plan that has a fabulous sustainable investing team.
Well, that's quite the history, and welcome back to BMO. Welcome home.
Thank you.
So we're going to talk a lot about the Canadian Sustainable Finance Taxonomy today, and maybe just to level set for our listeners. Transition taxonomies are classification frameworks that help identify, define, evaluate credible transition finance, particularly for hard-to-abate sectors. Now, there's some 60, 70-odd sustainable or transition taxonomies that are in existence or are being created, notably in Australia and the EU and Singapore and elsewhere. These taxonomies, while critical for redirecting capital, vary greatly in the way in which they are addressing this really complicated topic, particularly of transition. And unlike the green bond market, for example, where there's general alignment and consensus around what qualifies as green, there's the ICMA, green bond principles, there's the CBI, which publishes different qualifying criteria. With transition, it's really geographically driven. It really depends on what's available from a commercial or a technology perspective. And that's driven this variance, which has created some questions around what does transition actually look like and how does it play into the overall Canadian narrative around the way that capital is allocated. So, Marlene, maybe the first question for you is, what is the Sustainable Finance Taxonomy? I mean, why do we need one in Canada?
That's a great question. You've really laid out some of the issues already. So let's just go back to high school biology. When I told my kids what I'm doing right now, they said, wait a minute, isn't that biology? What are you talking about? You don't know anything about that. I said, yeah, I know. But a taxonomy you would have come across in your science class that was a way of classifying things in nature. So whether it's butterflies, fish, into different species, and in sustainable finance, as you've already said, it's classifying investments or economic activity into categories and putting labels on them. So green, transition, and what's new for this taxonomy that we're putting in place for Canada is a recommendation. Whether it goes forward or not is an open question, to have a third category that we're for now calling the abatement category. So as you said, the green category is one that's quite well defined and well agreed to. It's net zero, no emissions. So very clear. Transition is one, as you said, that has a lot of variation across the world, and it addresses the need to drive investment into those hard-to-abate sectors. So think cement or steel or manufacturing, where certain processes right now use fossil fuels, and going into electric arc furnaces in steelmaking is a costly, challenging exercise. So getting the funding directed into those activities is part of the goal. So we'll be defining what those are, what classifies as being transition, and it has to have a path toward net zero at some point in time. And where the abatement category comes in is it's about addressing sectors that are very high emitters, that are likely to experience a drop in demand on that path to net zero. So that's where oil and gas comes in, and that's particularly important in the Canadian context. We have an economy that's heavily dependent on that resource sector. So oil and gas production and refinement and their related effects make up about 7% of GDP, but they make up nearly a third of Canada's total emissions. So whatever we can do to help direct capital into reducing the emissions in those areas is going to be hopefully helpful. So how do we effectively do that? We want to do it without locking us into higher emissions in the long term, and that's going to help us define what goes into that category or not. So this abatement category is really about sort of threading that needle, creating robust, credible guardrails around that to enable classifying investments that are ring-fenced, that will significantly lower emissions in the oil and gas sector. So we'll get there. And you asked also, why do we need this? So as your listeners all know very well, Canada has legislation, commits us to reaching net zero by 2050, aligned with the Paris Agreement. And it's challenging. And one of the ways that we can help to get there is to direct capital into these areas that I've just described. And taxonomies bring clarity into the market. Right now, a green bond is different depending on who's issuing it, what criteria are being used to determine whether it's green. Investors, like the large pension plans in Canada, often have differing taxonomies that they'll use to determine which bonds they deem to be green. And then linking that effort into monitoring whether or not the activities actually remain green that the uses of proceeds are for. And then it links into reporting and disclosure. So there's a whole ecosystem that's needed to support the sustainable finance market to move capital efficiently, effectively, without a burden of a whole lot of people figuring out the rules of the game.
Thank you, Marlene. That's some really good clarity and perspective around the need for transparency in what we consider to be green or transition, and this third category of abatement. I mean, at the end of the day, it's all about getting funding and getting capital into these sectors that are trying to become more green or trying to align with a net zero future or a greener future, but that need capital now to make those necessary investments. And it's not always just continuing to build more wind farms or solar farms. It's going to be rolling up our sleeves and looking at sectors and areas, like you said, around cement and steel and other fossil-intensive sectors where we really need to be intentional about how we allocate our capital today. Let's talk about impact a little bit. Like, what impact do you expect the taxonomy to have on the market? Will it indeed change the way in which funding is being allocated to different sectors?
Well, we certainly hope so. And just to put the context in place, we need to attract at least $115 billion additional dollars a year into the transition to get to net zero. The need is huge. So we're not just trying to attract capital that's already within Canada into our transition activities. We're trying to attract capital from outside of Canada as well. So the taxonomy should help with that, because it means that we're no longer going to have a black box of you don't know what you're doing in Canada because there's no labeling, whereas the rest of the world has very clear categorization. So we should be able to more clearly attract foreign capital that is already looking for those green, sustainable, transition-related investment opportunities. So the demand is there from the investor side for these kinds of activities that are clearly labeled. If we look at evidence from other markets, what we see is investors are allocating more capital to taxonomy-aligned activities. China started this, and there have been massive flows of capital. In China, cities and provinces have secured about $9.6 billion collectively for priority projects through a pilot of their new transition taxonomy-backed loan program. So it's a great example. China is a different capital market, of course, but it certainly illustrates what's possible. Companies in the EU that aligned their activities with sustainable finance taxonomy have earned an annual premium of between 3 and 4% on risk-adjusted return. So there's some evidence that returns may be enhanced through this. In Australia, they introduced their taxonomy, and it boosted their sustainable debt market in size by about 11% very quickly. Their taxonomies have only been in place a little over a year. And they've recently released new guidelines for issuing taxonomy-aligned use of proceeds debt. And so that should scale it up even further. So we see from elsewhere that this is happening and that it should enhance capital flows because of the clarity and science-based criteria that are being used there that people can easily agree on as being appropriate, impactful. And then, of course, the next layer is reporting, because remember, this is going to be a voluntary framework here in Canada. So we need good monitoring mechanisms. And that means that we need to link into the reporting processes and disclosure activities. And we will now have the categories against which to monitor and report.
I like the point that you made around how this taxonomy will likely be used by foreign investors to make resilient and sustainable investments into Canada. I know it's really been positioned as made in Canada sustainable finance taxonomy, and it very much is that. It is being made in Canada with the realities of the Canadian market and sectors in mind. But the fact that it'll make Canada more investable for foreign investors is a good one that we shouldn't sleep on, because I think Canada is a great place to invest. We have some of the best resources, some of the best infrastructure in the world. We have some of the best governance in the world and best governed companies and highest laws and standards as well. I think this will be part of that narrative that as we go out and attract that foreign capital, these types of investments within these sectors are going to be resilient over time and sustainable over time, and aligned with not just the government's trajectory, but a science-based trajectory around net zero.
Absolutely. And a straightforward example that's happening in the very near term is around our electricity grid. We need to expand our electricity grid, and the government has come and put policies in place that are really going to direct capital there. And this taxonomy will help to frame that and ensure that investors who want to make sure they're either green or transition-based, that they'll have clarity over what they're getting and comparability with their investments, for example, in Europe or in Asia.
So which sectors are being prioritized, and why do these sectors need green or transition financing?
Mm-hmm. So the Council's mandate has come from the government, but we are independent of government. So it's an important piece of our governance model that we're independent with a lot of expertise under the hood from the financial sector, from a technical advisory group and an international advisory group that are helping make all this work happen. The government had set out some sectors that they wanted us to approach, and we have determined that the 6 we're going to prioritize are electricity, buildings, and transportation, which will all happen this year. And then mining, manufacturing, and agriculture and forestry will happen in 2027. And the prioritization was based on a number of factors. Obvious one, contribution to national greenhouse gas emissions. We want to tackle those that are big emitters that have a potential to decarbonize. So that's where we really prioritized. And we wanted them to have the potential to enable decarbonization across other sectors as well. So think electricity and the grid supporting the exercise, and that they have investment potential. So you just said it very well, that we want to attract that capital, and that's part of the purpose. So these sectors are well designed for that. Then I'll make a bit of a note about the oil and gas sector. So we don't expect to have guidelines for the oil and gas sector done by 2027, but we will start the work on that. And that will include in-depth research and engagement, same way as for these initial 6 sectors. And then in the effort to develop the Canadian Sustainable Finance Taxonomy, the oil and gas sector it's always been the most challenging piece of the puzzle because of our economy and the emissions profile, obviously, of that sector. We'll need to do it thoughtfully. We'll have a significant amount of engagement in and around the sector, but the challenge with the oil and gas sector is there isn't another taxonomy in the world that really tackles it. So this is new territory. So we're tackling these other 6 first because, frankly, they're going to be easier. We have good models in 70 other jurisdictions to base those on while we tailor those to Canada. So it's going to take time to get strong, credible guidance right for all of the sectors, but in particular for oil and gas. So that'll come later.
Just on that point, I mean, you mentioned as you were thinking about prioritizing sectors, the obviously contribution to GHG, but then potential to decarbonize or the investable sectors. Like there's all these myriad of factors that go into identifying those initial sectors. On that oil and gas point, I mean, as we think about the 70-odd, 60-odd frameworks that have been developed and taxonomies that have been developed globally around transition, if it is indeed new territory, that's really interesting. So you'll be trailblazing, and maybe that's part of what this third abatement category is meant to deal with, address as well. And we've heard the commitment that at some point in the future to also be directly addressing oil and gas as well in the same way you are these first 6 sectors.
That's right. And another area that we'll be innovative in is data centers. They have not been well addressed in other taxonomies. It's a very quickly evolving investment opportunity set, and we'll be tackling some new territory there too.
How are you addressing interoperability with other international frameworks that exist? So I mentioned the EU and the Australia at the outset. To the extent there's going to be divergence, which naturally there will be in some areas, or there's new ground and new territory being covered, like how will this Canadian taxonomy align with what has already been published or will be published in the future?
That's a great question, and it's really important because we want that capital to flow across borders and have a certain core of consistency across the criteria. And think about it, these criteria are highly technical, sector by sector. Often they have a time horizon attached to them, so you have to reduce emissions by X% because that's best in class in your sector by such and so time horizon. So that kind of thing can be quite consistent across the globe. It's science-based already, and in many of these sectors and many of these specific activities, it's very clear what that is, and they're the same across the world. In other areas, there may be nuances for Canada that matter, so we're going to take those into account. And we have a fantastic advisory group that is helping us with this, that our friends at UNEP-FI at the Uhren are leading for us, and they've brought experts together from half a dozen other jurisdictions that are closely related to the Canadian work. Our friends in Australia actually took the Canadian efforts that were in place in 2021, 2022 that didn't end up coming to fruition in Canada, but Australia basically took our efforts, used that to help guide their taxonomy, which now has been in place for about a year and a half, and we can now kind of take it back. And in many of these sectors, it's directly applicable. So we'll find that balancing act of sufficient interoperability and comparability to make sure that capital flows while tailoring to the Canadian needs and being a little bit innovative in some of these areas, including that third category.
Yeah, and I don't doubt, having been around some of the work to date, like seeing that focus on innovation is there, it's present. We have the right group of individuals from across the ecosystem, not just climate folks, but financial folks. This is ultimately a finance document that's going to be used in the capital markets and broadly for a variety of reasons across corporate Canada. And so I think having those parties, those bodies around the table, including Indigenous peoples around the table as well to share the views that are really relevant, it is creating the right circumstances to have this be effective. I know there's been some starts and stops around Made in Canada transition taxonomy through the years. You mentioned going back to 2021, even before that as well. But I'm very confident that this one will be a fantastic finished product. And I'm really excited to get using it, quite frankly, and bringing it to my clients to use as well.
Thank you. I appreciate the vote of confidence. And as you say, we've got the right group of people around the table. With the financial sector has been behind this for quite a number of years. We've added this technical advisory group that has expertise across many different areas, and we have involved Indigenous communities, and will be making some deep engagement with those communities to hear their voices loud and clear.
So let's get to maybe a thorny question then around the balance, naturally, that the taxonomy will have to sort of, I think you used the words thread the needle earlier, just be cognizant of the fact that there's going to be science-based recommendations and pathways that make their way into the criteria, especially in the thresholds around what qualifying activities are. So it's something obviously around a 1.5 to 2 degree climate pathway. But how do you counter that with an increased and renewed focus of the government around energy independence and ensuring that we as a nation are independent and non-reliant on external inputs around energy production? How does that work and kind of come together artfully and masterfully in a way that produces a very usable document, which to my interest or comments earlier, we're so excited to use?
Well, the usability is really the key. And it's really important to be clear on what this taxonomy is for and what it's not for, and where we're drawing the boundaries around what this activity of creating the taxonomy is about. So first of all, the objective of this first phase is climate mitigation, reducing greenhouse gas emissions. It's quite a simple statement on the one hand, and on the other hand, of course, it's got a lot of complexity attached to it. The ambition, as you said, is anchored in the Paris Agreement, operationalized using Canada's net zero by 2050 legislation. So we're well anchored, and there's great science that's helping us to determine what kind of criteria are going to work. Anchoring to the Paris alignment is a very deliberate choice. It aligns Canada with other jurisdictions, so that enhances our credibility and the interoperability. So the definitions and criteria all map back to that science-backed path, which is well researched. But importantly, the taxonomy, it's being developed independent of government. And that means that while we expect that the taxonomy will be valuable to governments today and down the road, it's not actually designed to advance any particular policy goal. And it's not designed really beyond its stated objective of climate mitigation. It's got a pretty narrow, straightforward mandate. So there may be all kinds of government or national priorities that fall outside of this taxonomy, and that's fine. It doesn't mean that they won't get investment. It just means that they don't meet the criteria for this particular label.
So what will drive adoption in Canada? Like, what does success look like for this taxonomy and how it's being used in the market?
Well, I think, first of all, we've had the federal government say that they intend to launch transition bonds. And that's an instrument that very much depends on the existence of a credible transition taxonomy for its effectiveness. So we've seen that the green market kind of slow down a bit here in Canada. We've seen a little bit of activity in the transition bond market, but it's pretty limited. So the government has a very clear intention that they want to see a clear taxonomy in place to support their own issuance at the federal level and likely at the provincial level as well. And what we're seeing in other jurisdictions is indeed market-driven adoption of taxonomies, and it's spurred by development of taxonomy-aligned bonds, loans, and other instruments as well. So that's what we want to see. And we see the demand from the investor side. Your clients, the pension plans, the asset managers, they're demanding this kind of standardized classification system because it replaces this patchwork approach. And in particular, as we've talked about, foreign investors already are used to this in the EU and in Asia. They're using these elsewhere. And so they are going to benefit from investing capital in Canada once there's more clarity on our structure. And then use of proceeds financial instruments that the taxonomy should help support. So the taxonomy complements existing global reporting standards. It helps businesses to disclose metrics like taxonomy-aligned capital expenditures where we can measure their progress, operational expenditures and revenue. There's more credibility around what they're actually disclosing. And part of the mandate of this council, remember, it's called the Taxonomy and Transition Planning Council. So we will get to some baseline work coming out soon about providing guidance for companies about developing credible corporate transition plans. And that's something else investors are looking for. And Canada's way behind other jurisdictions, even the U.S. Many more U.S. companies have credible transition plans than Canadian ones do. So it supports investor stewardship, engagement, and portfolio analysis. So there's demand on the investor side. It helps with the credibility and right through the whole ecosystem through to reporting and transparency.
So we have to use it.
You do.
I mean, you gave the example earlier about Australia, right? They saw 11% uptick in sustainable debt issuance shortly after publishing their own taxonomy. And we are very similar in a lot of ways to the Australian economy. And so
capital market, very similar capital market.
Yeah, very similar capital market. So I think if anything, we should see that sort of adoption and that sort of bump. And maybe initially in the public sector, like the government of Canada has indicated they'll be issuing transition bonds as early as 2027. But that will, I think, spur and catalyze both others in the public sector as well as the private sector to really get moving. Okay, last question I have for you. You recently published, or the council recently published, its North Star report for public comment. Who should participate in the process and how do they do so?
Thank you. So this fundamentals report that launched July 9th is really key because it's the report that's really foundational, and every bit of sector work that we do will come back to this fundamentals report. Whenever there's a question mark about how something should be done, it's laying out the principles. It's also the case that these are living, breathing documents. They're not going to be one and done. So although this fundamentals report really will benefit from this cycle of public consultation that's coming, that's going to last about 5 weeks from July 9th, it's not be all and end all, because as we go through some of the sector work, it will cause us to reflect back on some of the principles that we've put in place and help to refine those principles over time. So there is a bit of an iterative process that will go on here. We do want to hear from people in terms of the commentary on this particular report, and then again on the 6 priority sectors that we'll be putting out over time. We'd like to hear from unions, from labor market professionals, from professionals within industries, industry associations, people working in the supply chain of those sectors, obviously companies who may finance themselves using green and labeled transition instruments. And in particular, we're really eager to hear input from Indigenous peoples. Many of them own businesses or lead projects in these sectors, and some sectors obviously particularly important to Indigenous communities. And they bring diverse perspectives around especially social safeguards. So, for example, how should the taxonomy operationalize the principles of the United Nations Declaration on the Rights of Indigenous People, so UNDRIP. And in particular, we have concerns about certain industries where we don't want to have a green label or a transition label be interpreted as being universally a good thing if there's significant harm being created in other dimensions. So do no significant harm is an important principle as our minimum social standards. So these are things that we want input on, and in particular, our Indigenous partners are excellent for helping us think that through. The draft is live. It's on Business Future Pathways website, so www.businessfuturepathways.ca. You can go to the site, read the report, click on the public comment portal, and provide your feedback. There are quite a few questions. There's about 25 questions that we're asking people to weigh in on, but you don't have to answer them all, just those that matter to you. And if you'd like to comment on some other aspect and you want to put a letter or statement, you can upload that as well. So public comment is open until August 13th. So really hoping we'll have a wide spectrum of Canadians in civil society and across the professionals, across the organizations that expect to use this. We would really like them to participate. And if anybody needs accommodation to participate in the comment, they can email us at the Secretariat.
Great. Well, Marlene, good luck with the public consultation. Good luck with publishing the first 3 sectors. Good luck with finalizing and publishing the fulsome taxonomy. And thanks for all your work in this space. And thanks for joining the podcast.
Thank you. We're excited. We're going to get this one done.
Thanks for listening to Sustainability Leaders. This podcast is presented by BMO. You can find our show on Apple Podcasts, Spotify, or your favorite podcast player. Press the follow button if you want to get notified when new episodes are published. We value your input, so please leave a rating, review, and any feedback that you might have, or visit us at bmo.com/sustainability leaders. Our show and resources are produced with support from BMO's marketing team and Puddle Creative. Until next time, thanks for listening and have a great week.
For BMO disclosures, please visit bmocm.com/podcast/disclaimer.